Hey guys, Stock Saturday, and it's been a green week for me, outperforming the markets. It looks like about 3.3% up for the week, so rather nice. About 50k, just over 50k, compared to the S&P is down 1.17%. So rather a nice beat there. It's mostly sort of happened over the last couple of days. We had a little bit of economic news, which I'll get to. And Nasdaq slightly outperforming the S&P, down 0.89%. We're sort of going through the SaaS apocalypse, as people are calling it, software as a service names, sort of struggling a little bit on the idea that AI can potentially do some of their work. Sort of companies, implementing their own software, developing it with AI, or AI competitors potentially spinning up and competing for margins and things. So yeah, we've had some interesting moves. For me, semiconductors are starting to creep up the portfolio. Applied Materials up 9.7% this week, has gone second. I think it might have been second last week anyway. Samsung pushing up as well, 8% up this week. And TSMC now above Amazon. I have also made a sale, sold out of my Meta for not quite as much of a loss here. I think I sold out about 645-ish, so near enough break even. Sort of lost a bit of conviction in Meta really on what they're going to do with their capex. We sort of talked about them last week, spending about 135 billion, I think theirs was, a bit less than Google and Amazon, but they seem to have less of a point to it, a sort of end goal. Whether it, part of me thinks it's sort of being able to lay off more of their own employees, which is a little bit harsh, but business is business. They might be able to do sort of run more of their business with AI if they develop the more of their own models. I've heard targeting investors, targeting users of the platforms with more specific ads that they might be interested in rather than sort of skipping them. And yeah, they're not going to have an LLM, a decent one out of this, even if they spend a load of money, I don't think. So yeah, that seems a lot for 135 billion. That doesn't seem like they're going to get a huge amount out of it. And you're going to get all the depreciation come with that, potentially a net loss on a GAAP basis this year and potentially even next year. That'll, I'm sure, make the headlines and, surprise some people, even though they probably should be baking it in now. But yeah, so I just thought, I've got plenty of other things that I would rather be investing in, potentially just the ETFs, and I probably need to hold some more back for tax. So yeah, in two minds about what will happen with that. A little bit of quick fire news. We got an announcement from Hive signing a $30 million 2-year AI deal. So this is, they're saying, should be $15 million in annual recurring revenue. So after the 2 years, they expect to renew this at probably a similar amount. And yeah, this should take them from 20 million annual run rate revenue to 35 million, or sort of on their goal for 140 million by the end of this year. So not to do 140 million this year, but to get at a forward basis of 140 million. So could be November, this coming November to next November, in theory, is 140 million. But yeah, a reasonable start, and yeah, hopefully we get some more of these deals and they start to get a bit more love as an AI name, as well as just crypto. And all of this capex, of course, from the hyperscalers could coincide reasonably well with this. I still think Hive have sort of got reasonable potential. Obviously, we could do with Bitcoin being an awful lot higher than 67,000, but yeah, we'll have to see. $2.14 on the stock isn't exactly too helpful. They can't really do a huge amount of equity financing, or if they do, then stock price will just absolutely tank, and we're not really going to be going anywhere. Or we're not going to be getting to my goals if they do sort of a load of at the market sales at this price. But yeah, we'll have to see. I thought this was interesting to highlight. I've shown this before, the sort of by country holders of US Treasuries. So this sort of includes banks and pension funds as well as the governments themselves. But yeah, we've obviously sort of been talking about Japan. People have been talking about Japan and China sort of being two of the major players, sort of one seeming to be increasing their holdings. Japan sort of have increased pretty much every month. Well, yeah, it looks like every month since Christmas 2024. So that was quite interesting. This goes up to November 2025. So yeah, it's not 100% recent, but that's the best they give you. UK as well. A lot of people haven't sort of really realised have gone quite a clear second going up to November. We're now $200 billion ahead of China. So China are quite a distant third now. Fourth sort of being Belgium, and then Canada. Cayman Islands is of course a load of hedge funds. You know, there's only sort of whatever there is, a few thousand people on the Cayman Islands. So yeah, that is a load of hedge funds. And then you got all the sort of other countries. But yeah, I just thought it was interesting that China continuing to, I would presume, let treasuries roll off their balance sheet. They're not actively selling. It's just when one comes to maturity, they get their money back and put it somewhere else. They don't renew it. So yeah, they're not open selling in the market, I wouldn't have thought, but you know, that number dwindles down, 768 billion down to 682, and UK taking up that slack, strangely enough, as well as Japan. So debt market still looks interesting, I think, but you would presume all of these numbers on a grand total basis will still be going up. You see the grand total down the bottom here, 9.35 trillion, up from 8.7. So debt's always going up. We got the monthly revenue from TSMC, always good to keep an eye on, and it was a record, of course, 401 billion new Taiwan dollars, 36.8% up from January last year. So very, very nice, back to you know, fairly significant numbers. I think 2025, sort of end of 2025, we were getting some in the teens and in the 20s, which they still said was very, very good. But I think now, you know, 2026, they said 25 was going to be a relatively flat year. It wasn't. Now 2026, we've got this enormous capex boom, so you would expect this continues to go up, and stock seems to be pricing that in. So very nice. Not sure whether this will be all AI or sort of Apple getting involved as well with the iPhone. Still sort of over 20% of revenue. So yeah, either way, a good number. Just a minor little announcement for herein as well. They got added to, or they're getting added to, the MSCI USA index on February the 27th. So 2 weeks away today. And yeah, this just allows them to be part of sort of ETF flows if people invest in MSCI USA, which I don't think is all that popular. A lot of people tend to sort of go for the, you know, the Vanguard total stock market index in the US and sort of various, you know, passive funds and things. Some of them sort of benchmark against MSCI USA, I would imagine. So yeah, herein get a little bit of automatic inflow from that, which is quite nice. They're obviously a sufficient size now, and that's a big help. So not exactly a huge holding for me, but I always sort of like to keep an eye on them. I think it's actually one of my smallest holdings, pretty much. But Evolution AB, the sort of online and live casino gaming stock that I hold, sort of partly because of the huge profit margin. So I do like to just sort of see if that profit margin is maintaining, and yeah, it's looking quite good. It's a little bit down from the peak. You can't hold sort of 60% net profit forever. It's only sort of CME and a smattering of others that can command that. And yeah, in the last quarter, revenues are down 3.7% from this quarter last year. And well, total operating revenues down 9.5%. They had some other revenues last year. Looks like that's possibly a one-off. And yeah, this has brought EBITDA down 13%, adjusted down 6%, and net profit down 18.6%. So that's not super helpful. And profit for the quarter 54.2%, which the whole year of 2025 was 50.1%. So profits up a little bit from earlier in the year, and 54.2 is still a strong number considering where the stock is. I think they're still looking pretty strong. It looks like they're adding an awful lot of live tables, up from 1,700 to 2,000 at the. I think this is compared to this quarter last year, so 300 tables added in a year is rather strong. And the worry for them, of course, is still that this online gaming scene will get regulated in more and more countries. So it's just nice that they highlight this as well. Their share of the regulated market is actually increasing. So 41% in this quarter last year, up to sort of 45, 44, 46, and then the most recent quarter, they now hold 47% of the regulated markets. So yeah, if some of their other revenue goes away, they do hold a fairly commanding position in the regulated side of things. Whether they can sort of get into USA more, US being 71 million in revenue compared to 366 in Europe. We'll have to see, but US obviously is a lot of potential. So Applied Materials, my second biggest individual holding outside of the options now, released their first quarter 2026. Obviously, this is Q4 calendar year, and is looking not amazing, I didn't think. I mean, the stock was up about 10% on the news. This is more a sort of guidance and expectations rise from the looks of it. Guidance sort of seems to have the largest impact of every earnings release at the moment. It almost doesn't matter what what you come out with. It's all, or what you come out with for that quarter in particular. It's all about sort of guidance for next quarter and guidance for the rest of the year if they like to give it. But yeah, they're sort of numbers on the face of it look, okay. You could have quite easily seen this stock go down, I would have thought. Revenue down 2% from this quarter last year. Gross margin is up ever so slightly. Operating margin, there's some sort of adjustments in some of these numbers, which they note later on. Diluted earnings per share up 75%. That is sort of largely due to some adjustments. They sort of show adjusted earnings here. Gross margin slightly up, operating margin, slightly down, and net income 2% down. So yeah, there's some adjustments here that we'll have a quick look at. And they're sort of making some recent highlights about Samsung joining their new building. Oh, and introducing some new tech for gate-all-around transistors and 2 nanometer nodes and beyond. So that's pretty good, keeping ahead of ahead of the most modern nodes, going to sort of 2 nanometer and sort of 1.4, 1.8 that some of the others, Intel and people, are on. So yeah, got to keep ahead and keep all of this gravy train running with the semiconductor equipment. So that was good. Yeah, their guidance of 7.65 billion for Q2, so this will be sort of January to March, as I would call it, and $2.64 in adjusted EPS. So compared to 7 billion, it's reasonably well up, 8-9%. Revenue growth, and $2.64 up from $2.38 this quarter. So yeah, that's pretty decent growth, but I didn't think anything to blow the doors off. 10% up. Sounds like people are just getting excited about the capex boom, really. There's very little change in the balance sheet, largely because this is from last quarter rather than this quarter last year. So yeah, 3 months, nothing huge is normally going to change. They haven't had sort of acquisitions to churn through like your Broadcoms and some of the others. So yeah, not a huge change. Cash sort of ever so slightly down. Long-term debt ever so slightly down. Short-term debt exactly the same. Just very little change at all here. Thought their revenue by geography or region was quite interesting as well. They've had quite a change since this quarter last year. United States revenue down from 13% to 9%. You don't see sort of too many US companies with 9% US revenue. Europe doesn't really do a huge amount, do they? Down from 4% to 3%. Japan down from 8 to 7, and then the increases, of course, Korea, which is largely sort of Samsung and SK Hynix, down from 23 to 21, but obviously still more than double the US, which you would think has Intel, fabs, and some of the others. Taiwan up from 17 to 25% of revenue. TSMC obviously pushing pretty hard. Southeast Asia 4% up to 5%, and China down from 31 to 30. But again, 30% is their largest region and over 3 times the US. So quite a large exposure to China, and it sounds like China have, or between the US and China, they've lifted some restrictions on the Chinese memory company. So yeah, it's potentially some equipment being sold to the Chinese memory companies, and then also Chinese memory coming into the global markets and the US market. So we'll have to see what that does for memory prices. Could be a bit of competition, bit of margin pressure, and it could sort of ease the the craziness that we've seen in memory. So there wasn't a huge amount in the presentation extra. It's just some sort of flashy slides of equipment mostly. The information was largely the similar to the earnings release, but they do give this sort of handy multiple quarter reconciliation of the adjusted income. So you can note sort of some fairly large adjustments that are causing the differences this quarter. You've had a legal settlement of $253 million, quite a large legal settlement related to the Bureau of Industry and Security to resolve a previously disclosed export controls compliance matter. So yeah, obviously a one-off charge. We sort of adjust that out. It's not nice to see, but yeah, that's that gets put into the adjustments, and I would say a fair adjustment. It is just a one-off. And then net income. So obviously net income was massively up this quarter, but you've had some fair old adjustments in there. Unrealized gain. Unrealized gain on strategic investments. So should really probably take that out because it's going to be up and down and varying per quarter. So yeah, they take that out, which I would say is fair enough. And sort of non-GAAP adjusted income is, as we said, down from 1.946 to 1.9 billion. So yeah, this quarter is slightly worse than last quarter on an adjusted basis, but it's going forward that looks amazing. So it was a fairly busy week for economic news. There were quite a lot coming out from the US. We had the retail sales, which were sort of looking relatively poor, really, 0% for month-on-month numbers, and yeah, some reds sort of here and there. Nothing sort of all that important, really. Wednesday, you got the non-farm payrolls, though, normally on the sort of first Friday of the month, but still with government shutdowns and things are a little bit all over the place. But yeah, you had some pretty strong numbers across the board. Average hourly earnings a little bit better than expected, although last month was revised down from 0.3 to 0.1%. It was expected to be the same, and we got 0.4%. So yeah, fairly big revision. And then the official non-farm payrolls number was 130,000. But if you look at private, it was 172,000. So it's actually government jobs being negative and private sort of picking up the slack. If you look into this, it is sort of healthcare, quite a lot of healthcare, to be honest. There's a reasonable amount of manufacturing in there, but yeah, it is quite a lot of healthcare. So government sort of adjacent private healthcare, private, yeah, that's what they're sort of people are calling it, government adjacent jobs. It's not officially government jobs, but sort of healthcare is quite closely related. Private, admittedly, private last month was also revised up. So even though it's partly healthcare, private sector still looking pretty strong. And the unemployment rate down to 4.3%, wasn't expected to be. So that's pretty good. And the U6 unemployment rate, which was sort of mentioned last few weeks, or last month, I think, when it came out, down to 8% from 8.4, still pretty high. So this includes, things like people who are sort of working part-time but would like to be working full-time. So they don't count as unemployed, but they would sort of count themselves as underemployed, maybe. They're working part-time because that's all they can get. So yeah, 8% on that, looking a little bit better. And participation rates ever so slightly up. That's sort of good to see. And then Thursday, we got some UK numbers. It's all looking a little bit dismal. Reds across the board. GDP at 1%. Not exactly anything to sort of shout about. GDP for the month, 0.1%. And the 3-month on 3-month was 0.1%. So pretty awful. And yeah, what else have we got? Industrial production down 0.9%. Wasn't expected to be this bad. Last month's ever so slightly revised up, but looking pretty poor. Business investment down 2.7%. Was expected to be positive, so not particularly good at all. And then late Thursday, you got the jobless claims, continuing jobless claims, both sort of slightly worse than expected, slightly higher than expected, but not by a huge amount. And then Friday, the inflation numbers were slightly soft. Headline was sort of 0.1% lower on the monthly and the yearly. But core was was as expectations, but sort of both being down from last month. So pretty good. Or core was slightly down on the year compared to last month. The actual month figure was 0.3% compared to 0.2 last month, but it's the year-on-year figure that we generally focus on. And headline down from 2.7 to 2.4%. So we sort of highlighted trueflation recently being very, very low. I think that is now in the 0.7% range. So yeah, potentially a leading indicator of inflation continuing to come down. So portfolio-wise, as I say, you can kind of see why I'm in the green compared to sort of the S&P and the Nasdaq. It's semiconductors and sort of gold and silver doing reasonably well. Coeur Mining sort of up 4%. Got Pan American up 4.6%. Euronext actually doing quite well. I was sort of kind of tempted to add a little bit more to them with some of the cash, but yeah, didn't get round to it. Equinox Gold up 8.2%, so that's done quite well for the week. And yeah, some other reasonable numbers. Things sort of a little bit up and down. Rockwell down 5% and AB up 5%. So my sort of automation bets going in different directions, but it's only 1 week. Caterpillar still continues to be strong, it's nearly 50% up. So that's pretty good. American Tower as well. It's sort of not been doing particularly well. That's up nearly 12% for the week. So nice to see that come back. And Sylvania Platinum, my tiny little platinum stock, old favourite, having quite a good week as well. And on the option side, so I haven't touched Equinox Gold. That's up 20% with the stock doing pretty well. The options obviously amplify that. I decided to deploy a fair bit of cash into B2 Gold, sort of thinking earnings are next week. I've got quite a bit of earnings. I think Coeur Mining, I believe, are next week on Wednesday. So that's Coeur, B2 Gold, and Equinox all on Wednesday. I didn't check Pan American. I think they might be this coming week as well. So quite a big week for my gold and silver miners. But yeah, decided to buy a little bit more B2 Gold. Still think people aren't sort of focusing on where they're going to be in 6 months after their sort of pre-sold gold rolls off and the expansion capex sort of starts rolling off and they start making money out of their new Canada mine. And so far nothing significant seems to be happening in Mali, so they just keep getting cash overflowing from there. So thought why not top up, and it is now overtaken my some of my other holdings certainly. Still not quite as big as Equinox with the stock and the options. That is my largest holding, but possibly not for long. We'll have to see. I added a small amount to Hive, sort of obviously tempting to put more in there at the low prices, but they are sort of January options, so yeah, only 11 months to run now, and certainly no guarantee that anything happens with crypto sort of in the next year. We could be, as people are saying, in a 4-year cycle, and this is the downturn year. So yeah, obviously if Bitcoin just even stays flat for for sort of 6 months, then that Hive price isn't really going anywhere, and the options will be next to worthless. So buying more here would seem like, while it's like 48% down, a good buy. It's potentially not. So yeah, we'll see. I'll sort of largely leave that where it is, I think, unless Bitcoin starts to really move and the stock price doesn't. We'll have to see. Nakamoto sort of drifting away to zero. For anyone sort of wondering why I don't just sell it and at least get 50 quid or 100 quid out of it that it was last week. This is because it's 180 contracts. There would be fees on that, and the fees from the looks of it would be more than the value. So they are effectively zero already, unless Bitcoin sort of triples within the next month, which is unlikely. So yeah, and on the ETF side, not a huge amount has moved. Digital security and robotics doing quite well, both up sort of about 3%. Everything else under 1% moves, so nothing too much there. And the crypto side, you don't sort of see this too often. Bitcoin down basically 1%, and with Ethereum up 1%. So very, very small moves for them. And a reasonably big cash pile. Thinking sort of doing some rough maths, I do need about 230, maybe maybe a little bit more for tax. So that'll be rough. There we go. So leave your thoughts in comments below, how you guys are doing, and like and subscribe. See you soon.